Welcome back to the weekly stock portfolio update videos. Currently, my two stock portfolios sit at a combined value of just under $68,000. That's made up of the nearly $41,000 in my stake portfolio and the nearly $27,000 in my Vanguard portfolio. Today I wanted to be going through the recent Nvidia hike and what's happened with GameStop. First of all, I wanted to go through Nvidia and its massive run-up, which has now passed Apple in market cap as the second most valuable public company in the US. Nvidia passed Apple in market cap on Wednesday as investors continued betting on the chipmaker behind the artificial intelligence boom. Nvidia is now the second most valuable company behind Microsoft, and Nvidia is also at a $3 trillion market cap milestone on Wednesday after the shares rose 5%. Nvidia passed Apple in market cap on Wednesday as investors continued to bet on it. Nvidia also hit that $3 trillion market cap as mentioned before. At market close, Nvidia had a market value of $3.019 trillion versus Apple, which stood at just under $3 trillion. Microsoft is still the most valuable publicly traded company with a market cap of $3.15 trillion. This was as of Wednesday, but Nvidia shares continued to rise and have risen more than 24% since the company reported its first quarter earnings in May, and have been on a tear ever since last year. The company has an estimated 80% market share in the AI chips for data centers, which are attracting billions of dollars in spending from big cloud vendors. Investors have also becoming more comfortable with Nvidia's huge growth in sales to a handful of cloud companies can persist. For the most recent quarter, revenue in its data center business, which includes its GPU sales, rose 427% from a year earlier to $22.6 billion, and about 86% of the company's overall sales. Meanwhile, Apple shares are up about 5% this year as the iPhone maker's sales continues to stall in recent months. In its most recently quarterly earnings report, Apple said its overall sales dropped. Overall, what this means is, as an Apple investor myself, this is something I've been watching closely. And this Nvidia run-up is also something I've been keeping my eyes on. And you can just have a quick look at the stock, and in the last 6 months alone, it's up 160%. This was a stock I was looking at investing in at $500 a share, but couldn't justify the price at the time. Since then, the stock has absolutely rocketed up and I've missed out on a lot of money. But I'm still not kicking myself that I completely missed out on it, as I'm still invested in the S&P and other big ETFs which still has exposure to Nvidia. But the stock is now trading at $1,208 a share, and it will be having its stock split, I believe 1 to 10 coming up soon. Overall, it's ridden this wave of AI and its craze up 33% in the last month, and it doesn't seem to be stopping anytime soon. The stock did have a period around here when it was kind of sitting and idling at the same kind of price range, but then once again had a boom, and since its earnings report, continued to go up. The earnings did forecast strong guidance, and I do understand why there is this hype around Nvidia. But again, this isn't a stock I hold with full disclosure, but I do think it's something interesting to keep your eyes on. And if you are been an Nvidia investor, you would have had some amazing gains in the recent times. Even taking a 5-year outlook, the stock is up 3,000% in the last 5 years. So if you've been investing back when they were making these chips for gaming and other things like that, you would have now made a massive gain if you've held your stock for this time. What this does remind me of, even though this is at a much larger scale, was back when Tesla had its massive run-up. And I was actually a Tesla holder back then. I sold out near the very top, which I was quite lucky for. But this does remind me of that. A lot of people are questioning whether Nvidia will be able to hold these share prices and whether it will be able to maintain these gains and if it can keep its market dominance. But that will be for future videos, and I'll keep tracking them. But it's just interesting to see how Nvidia is trading and how it's now the second biggest company, and it's getting closer and closer to Microsoft. And if this does overtake Microsoft, then I'll do another video again with Nvidia being the largest company in the world, which sounds crazy to say, with pretty much a lot of these gains all being down to the last, you'd say, half a decade. The next big story that was making news is around GameStop. GameStop shares dropped around 27% past their sales decline. If you've been watching this, there was a massive run up in the stock around Roaring Kitty and things like that. It's something I've kind of been keeping a little bit of an eye on. But the stock shot up with his big bet, and I'll go through this. And they've recently just had a recent downturn of nearly 30% over some negative sales. The video game retailer posted a net sales of $881 million for the period. That's down 29% from the $1.237 billion a year prior. The sales decline was steeper than the two Wall Street analysts who cover the stock, and it just doesn't seem like it's a good place to be investing your money. GameStop, the video retail company, is currently riding another wave of trading enthusiasm, spurred on by the meme trader Roaring Kitty, showing no signs of operational turnaround in its dismissal fiscal first quarter results. The company on Friday posted a net sale of $881 million for the period, down 29% from the $1.237 billion a year prior. Their estimates were in a range of $900 million and $1.09 billion. But yeah, overall, fundamentally looking at this stock, I don't think anyone who's actually kind of doing a proper analysis on this is looking to invest in this. It's more, like we said, just meme stock traders. I do a lot of shorts on this video. I do a lot of shorts on this stock, just kind of tracking how its volatility trades and everything like that. But again, with full disclosure, I don't invest in GameStop, and I never have. And it's just not kind of something that matches my investment philosophy. But if someone does trade it and make a lot of money, fair play to them. But I also don't like to see people obviously lose large sums of money as well. The stock is still up nearly 73 or 72% in the last 6 months alone. And it's technically even up over the year. But if you take a bit of a longer term approach, you can see it was kind of trading down for a while. And it's just kind of had these recent booms with what's been happening. But overall, it seems to be on a negative trajectory. Again, if you want to do this as some financial advice, you can go invest in whatever you want. But I will continue to keep doing shorts on it and see what happens. But the stock, after having a nice run up, a nice bit of a boom in the week, it proceeded to crash and is now down nearly 40% in the day alone. Going through my overall portfolio, like I said, I'm sitting close to 41,000. I didn't invest anything in this last fortnight just because I've been saving up because I've got a trip coming up. Looking through my holdings, you can see all my holdings are still the same. Nothing's really changed. It's just been a good returns recently. The likes of Apple, for example, is getting closer and closer to that $200 a share. It's kind of gone under the radar. It's not really getting much media coverage or anything like that. But the stock has been up 8% in the last month alone. And even after these dips, it's kind of bounced back. Because I remember when I was getting really close to that $200 a share price. And then it had this really negative sentiment, traded down to the 170s, even in the 160s at points. I did actually buy in a little bit. And now it's all the way back up. And it's been good for my portfolio because Apple's actually my second biggest individual stock holding. So it's the third biggest holding in the portfolio. And I'm up around nearly 40%. So around $1,000 in equity. And my average share price is around $142. So it's been good for me having Apple trade back up. Again, the reason why I held my position through the downturn was because I think of this as like a blue chip company. I don't see it going anywhere anytime soon. If I was to leave this portfolio for, let's say, a year, 5 years, 10 years, I think Apple's still going to be Apple. Again, there are worries around its growth, but in terms of just as an investment, I think compared to other companies, I think it's probably going to outlast a lot of them. It's got a great amount of cash on hand. It can pay off its debts. Everyone has the Apple ecosystem. It seems like if you go to a university or you go to lots of workplaces, there seems to be Apples everywhere you go, whether it's a phone, MacBook, AirPods. So I think it's just a good company that I plan on holding for the long term. Looking at my other holdings, you can see Amazon, which is a tiny position, has been quite good. Costco actually is up huge. I'm up around, I think it's close to 70%. I'm over 70% up now in Costco, which is crazy to say. This is one of those stocks where I was saying in my videos, I can go back and probably find it, but I was saying it was around 500, and I said if it dropped around 500, I'd invest again. And in the last year alone, it's up 70%. So it's been absurd. It's up 41% in the last 6 months. And yeah, it's just been crazy. So even though I only own just over 2 shares, my total equity is up to $1,752, and I'm up $726. So maybe look at taking some gains in Costco, but I just think it's such a good company. I always said it has one of the best business models, this and Microsoft, where even as someone who goes to Costco myself, it just ticks all the boxes. It's been a great company for me to hold, and I'll keep doing videos tracking it, but I can't believe I'm up nearly 70% on a holding like Costco, because most of the time when you think of these high returns, it's normally in a tech stock like Microsoft or Apple, which I own, even Nvidia, Google, but my best returning stock has actually been Costco. Speaking of Google, you can see it's here. I'm up around 27%, which has been really good because it's had such a strong year, up 42%. And this was something I actually bought into, if you remember, a few videos ago, or a while ago now. I did do some purchasing in after I sold some JP Morgan, because I was up like 50-60% on JP Morgan. So I sold a little bit and I bought some Google. And yeah, it's been good for me. The last 6 months is up 27%. The last month is up a little bit, same with the week. But again, something long term, and it's been nice and strong. I've been happy to reallocate those funds because JP Morgan's been doing good as well, but this Google position, something I just held for a while, saw it was down, and now I'm holding around nearly 10 shares, and I'll keep tracking how that's doing. Going through the rest, like I said, JP Morgan, one of my best performers as well, at 55%. McDonald's is trading flat. Bought this, got a 13% gain in like a week or 2 weeks. For some reason decided to hold. I could have just sold out, and now I'm flat on it, so probably wasn't my best decision ever. But again, McDonald's, another company like Apple. If I look long term, I don't think it's going to go anywhere anytime soon. In 10 years, I think there'll still be McDonald's around 5 years. So I'll see what I decide to do with that position. Microsoft, on the other hand, still my biggest company, individual holding. I got 11.23 shares. And same, it's just ticking on like it has been. Even hopefully Nvidia doesn't catch it too soon. But I'm up 45%, and I've been quite good on this one. I always say I bought in whilst it was kind of low, and I didn't even mean for it to, but it just grew to be my biggest position. And now I'm sitting at around 4,760 USD in equity. So it's been a really good investment for me. My biggest holding by far is still VOO. It's nearly 13,000 in equity USD. So it's by far my biggest. And the whole S&P's had a great year, up 25%. I think I'm up, there we go, 22%. That's obviously because I'm dollar cost averaging. As I continue to buy in, obviously you're going to be buying in at higher prices. And probably the next time I buy in, I'll push myself over the $400 average buy price of my average shares, which I don't really mind because, again, I'm dollar cost averaging. My plan is to keep 50% of this portfolio in the S&P just to kind of balance everything out. And then I look at my other stock portfolio, which is at Vanguard specifically. I would like to invest in VOO, but it's not an option. I invest in two specific companies, and that's VLC and VGS. VLC is my Australian companies index, so it kind of holds the largest companies here in Australia. It's had a decent year, up 15.5%. But if you look at the kind of product details of it, you can look at the holdings. You can see it's all the big players here in Australia. So you have BHP, which is around 16%, CBA 14%, kind of the big banks, the big mining giants, Macquarie, all that. So the reason why I used to invest in VAS, which is a very popular investment stock ETF that Vanguard offers, and it offers pretty much, it's basically tracking the S&P but for Australia. And I sold out of that and decided to buy into VLC because it was a bit more just kind of top heavy. I found a lot of the performance of the good stocks was coming from those major players, and I just decided I wanted to invest in VLC. Good dividends, good history with the stock returns, and I thought it would be a good decision for me to invest in this so I could get some Australian exposure as well. I do plan on keeping this. The reason why I do this is, like I said, a bit of diversification, because my other holding, which is also in here, you can see, is VGS. So that's the international shares ETF. So this one gives me a lot more diversification into other markets as well. It's not just Australia and US. So it's worldwide. I think it's up around nearly 22% in the last year, which is really good. And both these also pay out quarterly distributions. So I get the dividend payments, and they're quite big compared to my stake ones, which is quite nice. I just reinvest it. Again, I'm not a dividend investor, but they all count because I can just buy back into my shares, and you kind of get that snowball effect of the more I invest, the bigger my dividends get. The bigger my dividends get, the more I can reinvest into those positions, and it just slowly ticks over itself. But yeah, it's been a really good holding for me. I plan on having two separate portfolios. Reason why I started that was to kind of, again, diversify away from just having everything in one portfolio. And I kind of wanted to get away from just holding the US markets. Something could happen in the US and that could affect my investments. You always hear from people saying to diversify, and I always tell people to diversify. And having this exposure to two ETFs as my second and third biggest investment holdings And then when I look at my stake portfolio, I have VOO, which is my biggest holding, and that's an ETF as well. So I'm just getting those market tracking returns. And then with these individual stocks, my goal is to just kind of beat out on the market if I can. Where you look at positions like Costco, which is up 70%, or JP Morgan 55%, Microsoft 45%. So they're beating out on the S&P, but I'm not getting too invested in them, whereas if my individual stock holdings have bad years or bad times, I'm still getting the market returns. Overall, like I said, I didn't get to invest any money this fortnight just because I'm saving up, but the goal is still to get this portfolio to around 35 grand before the end of the year, which I think I will. I think I'm on good track for that. And then my goal for my my stake portfolio is probably to get it to around 50 grand. So I think I can tick off both those boxes. If I just put my head down, keep investing, and the stock market keeps having a good year, that obviously helps. This year especially, because I've had a lot of expenses and stuff to pay, I haven't been investing as much as I have last year. But because of how strong the market returns have been this past 2 years pretty much, it's helped boost the value of my portfolio. But that's something I try not to rely on, just because I want to be steadily investing, just so I know even when there's a downturn, I'm still buying in, like the case in 2022. And having a look at my Excel file, this kind of gives a bit more of an overview of how everything's looking. You can see how everything's weighted. The Australian portfolio is pretty much 50-50. The American portfolio is basically 50% VOO and then my individual stocks. And these kind of just show a nice little track of how my portfolios have been going over the years and each month. Because obviously I can look back at my old videos. Even I looked at a video from a month ago, my stock portfolios were sitting at around 60 grand, just over. And now I'm basically sitting at 68 grand. So that 8 grand in that short time has been pretty rewarding for me, at least. Because sometimes it can feel like you're just doing deposits and you're not actually getting much of an outcome. But when you kind of put it on an Excel spreadsheet and you track how your returns have been month on month, you can kind of see that compound growth and just makes you feel like you're doing a good job. Even I started tracking my dividends. I've been doing this for a little while now, and just my total dividends as well. So you can see my total dividends from stake is 407 USD, which is obviously a lot more AUD, and my total Vanguard dividends is around 800 AUD. So hopefully this year I can get around $1,000 in Vanguard dividends, because obviously my Vanguard portfolio back then was a lot smaller. And the start of this one I got for 223, and obviously the back end of the year you'll get bigger dividends, so that'll be nice. And just kind of looking at these two shows how my dividends have been growing. That was all for today. I just kind of wanted to go through what was happening with Nvidia and GameStop, and just a bit of a general update on how my portfolio is looking as well. Feel free to share how your stocks are doing or how your portfolios are looking. I just kind of wanted to mention what was going on with them, and I'll probably have my last update next week, and then there'll be a bit of a break whilst I'm traveling. Cheers.